Are you one of the many millennials born between 1981 and 1997, and you're just now starting to see your friends dive headfirst into the real estate market and purchase their first home? And now you're starting to wonder yourself if maybe you shouldn't be getting involved in making that first purchase yourself? Well, stay tuned because I've got some really good, helpful information that could help answer those questions, including why waiting until next year may cost you much more money. Hey everyone, Brandon Shupe, and welcome back to my real estate channel. So today I want to go over and I want to discuss millennials, young buyers that are just first getting started in the real estate market and purchasing that first home. You know, some of you know the last video that I had, I was involved in a teleconference with some other top real estate brokers from around the country. And one of the big discussions that we talked about in the video was how we're lacking these first-time home buyers that are getting into the market. Specifically, we're talking about millennials. Now, as we know, a lot of millennials are still living at home with their parents. They've taken on some college debt, and they're trying to get out from underneath it. But one of the important things that I really found interesting from a survey that was done by talking to millennials from around the country is that their priorities are quite a bit different and actually just the opposite of the priorities of how my generation was raised. You know, when we were young and we thought about, the first thing that we thought about was getting married. The second thing we thought about then was purchasing a home and then saving up for retirement. I was really surprised that I found out that millennials, many of them are actually working in reverse. You know, they're going out and they're purchasing homes before they get married, and they're more concerned about retirement before they are getting married and purchasing homes. So one of the things that I want to do in this video is try to encourage and try to educate millennials that are thinking about possibly getting into the real estate market and making that first purchase, and why waiting another year may start costing you a little bit more money. So what I'm going to do is I've got a couple of graphs and I've got some infographics that I want to get right into and I want to show you. And then we're going to come back and I'm going to talk a little bit more about this. So let's just get right into it and let me take you right to these infographics.
Okay, so here is the first of two infographics that I want to show you. And let's take a few minutes here and let's look at this. Now, Keeping Current Matters is a company that I actually subscribe to, and they're the company that I get a lot of this information from because I like to study the market and I like to know what the numbers are. But for young first-time home buyers, I think this is something that's really important to look at. Now, right now we're talking interest rates at about 4.45, almost 4.5% right now. And these are national averages on values. And when you look at the home price, the national home prices average is about $250,000. One of the things that Keeping Current Matters does is they get a lot of their information from big companies like Freddie Mac and CoreLogic, and these are the projections that they're calling for. The national average mortgage payment right now per month, this is a per month mortgage payment, is about $1,259. Now when you stop and think for a minute what people are paying for rent today, I know for a fact that there are people out there, unfortunately because maybe they don't have that great a credit, but they're either renting a small home or they're renting apartments, and they're not too far off on their monthly rent compared to what a mortgage payment would be on a home. But if they're projecting that in just 1 year, they're projecting that the interest rates are going to go up at about 5.10%. They're projecting that the home values, the home prices, are going to go up to about $262,000. Now those two things right there are going to increase a monthly mortgage payment. And when you look and see what they're projecting for the average mortgage payment in just 1 year, you can see it's going to go up about $150 a month. But when you calculate that over a year and you calculate that over a 30-year time period that you'd be paying on your mortgage, you're paying a lot more money. So there are some advantages of seriously looking and purchasing a home now. Now, these interest rates here, I know for a fact that there's a lot of young first-time home buyers that are out there that are really concerned about these interest rates. But I'm going to kind of debunk this for you, okay? Here's a 30-year fixed rate mortgage rates that have been going on over the last 45 years. Take a look and see where we're at. You can go all the way back to 1971 and look at what the average interest rates were at, almost about 8%. And you could go back and talk to your parents and grandparents and talk about what the interest rates were in the early 1980s. Interest rates in 1982 going into 1983 were over 18, almost hitting at 20% on interest rates. Who would buy homes then paying 20% on interest rates? But as you can see, as the years have gone by, the interest rates have declined. My wife and I purchased our first home in 1986. And at that time, we were right in this bracket about right here. The interest rates, we were right at about 9.5% at the time when we purchased our first home. And we were scared then too, being 23, 24 years old, purchasing our first home. But ultimately, look, it was soon after this, we ended up, after about maybe 10 years or so, we ended up refinancing our mortgage. And we ended up in 1996, we were well below 8%. We were almost at 7%. And we saved quite a bit of money. But overall, look at where these interest rates are at. So when you're seeing interest rates now at about 4.5%, 5%, don't get concerned. Look at these rates. I mean, these are terrific rates. Now, of course, if you were lucky enough to purchase a home in 2013, you were at about 3% on your interest rate. So with all this being said, I just want to kind of go over all this with you and just kind of give you the basic information. And we're going to get back and I'm going to talk a little bit more to you, and hopefully these two infographs helped.
So, hey, did you find that interesting? I did. And I'm really hoping that this information helps guide you through to help make that decision. And understand, this video is not just for millennials, but this is for anyone that's looking to purchase their first home. As we could see, as time goes by and with the predictions that are being made, it's going to cost more money, and the cost for homes are going to cost more money. So I'm hoping that this encourages you enough to get out there. And one of the things that I want to talk about before I end this video are mortgages and loan programs that are available out there through banks and mortgage companies. There are so many incentives out there right now for young first-time home buyers to get involved. I don't know if you know or not, but if you make a purchase and you do FHA financing, which is federal financing, and then even if you serve time in the military, you can get a VA loan, and in an FHA financing, you could purchase a home with as little as just 3.5% down. And in many cases, we can actually go back to the homeowner and ask for what we call a closing cost credit, where the seller, the homeowner, will actually give you a credit that'll be applied towards your down payment and your closing costs at the time of the actual closing. So in closing, I just want to encourage you to get out there and start talking to some real estate brokers. The first thing I always suggest is call a bank, call a mortgage company, and explain to them you're a first-time home buyer, and start the process of at least finding out what you can qualify for and getting an idea of what you would need for a down payment and closing costs. And that's the first place to start. Most lenders and mortgage companies, they're not going to commit you. They're going to simply run your credit report, see where you're at credit-wise, see where you're at with your job and your income, and they're going to simply tell you what you can qualify for. And from that point on is when you make the decision whether or not to take that next step. I do, most of my real estate area is Chicago, west suburbs, southwest suburbs, but I do network with some top real estate brokers from around the country, real estate brokers that are really smart, caring, and willing to take their time to help walk you through the process. Hey, who's the next person you know that's thinking of purchasing their first home? Always keep me in mind, and as always, make it a great day. Hey, thank you again for taking the time to watch my video. Please take the time to invite your friends to like my Facebook page and share any of my videos. If there's anyone that you know of that can benefit from my services, text or call me at my cell phone number provided here. You can always go back to my Facebook page and message me from there. Take care, and we'll talk soon.